This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Starting this week's shows is Iowa State University livestock economist Lee Schulz with a cattle market update. Lee shares information about USDA's cattle on feed and cold storage reports. Nat Bascom, Director of Engagement and Leadership for the Global Collaboration on Sorghum and Millet, continues today's show. He discusses how this collaboration will benefit sorghum and millet around the globe. Finishing today's show is K-State wildlife specialist Drew Ricketts with information about wild hogs. He says Kansas is often seen as a model state when it comes to wild hog management. That and more is coming up ahead on Agriculture Today. You're tuned into Agriculture Today on this Monday, and we start this week's shows as we usually do with a cattle market update. And then to give us an update this week, we have Iowa State University Extension livestock economist Lee Schulz. Lee, thanks for joining us today.
Thanks for having me again.
So starting off the cattle market conversation with what are cash cattle markets looking like right now?
Well, as we look at last week's trade, a bit softer. I think we're in that pattern of kind of maybe a 2-week correction so far as we peaked in early June. You know, as you look at live cattle prices on a live weight basis was in that 182 to 185. Seen some bid lower in the south in the 180. So again, a bit of a retraction from the highs we've seen, you know, pushing over 190, not just a few weeks ago.
And we've seen a little bit of retraction. Is that something we're going to continue to see?
Well, I think that's the big dollar question when we look at it, right? As you look at fundamentals are rather tight. You know, I'll point to the last 2 years. The highest prices we've seen were actually at the end of the year. And so, you know, we've seen seasonally prices take a bit of a step back here, but the fundamentals still remain very strong. When I look at the feeder cattle market, you have to look at that in tandem with the corn futures market or corn prices. You know, we've seen feeder cattle down this last week as corn prices were larger. Actually, on the week they were a bit lower, but we did see some rather large peaks, especially as you look at that Wednesday futures price increase. Now, I think when we're looking at the corn market, remember, we're going to see some wild swings during the summer. Next week, I think will help clear up a little bit of that as we are looking at, this week, as we look at, we're going to get 2 big reports here that's going to give a little bit of certainty. So on June 30th, we're going to get the grain stocks report as well as the acreage report. That acreage report is an update from the March prospective plantings report. So we'll get how many acres we actually planted. Again, another good indication of what that acreage will be come harvest, hopefully. And so that should provide a little bit more certainty into the grain markets. But as you look at, you know, drought conditions, you know, the maps are continuing to light up. And that's really putting a charge in those corn futures prices, which are obviously impacting feeder cattle prices. Higher cost of gain, we're going to see lower feeder cattle prices.
And Lee, what is box beef cutout looking like?
Well, you know, as you look at futures prices, fed cattle, I think we're seeing some of the same as we look at prices for box beef. When you're looking at those, prices are down week over week. Now, not too much of a concern as seasonally we start to see prices soften here over the next couple of weeks into a month. So what I noted in the box beef trade is we're seeing a really large choice to select spread. And really, it's been a bit of weakness in the select as opposed to strength in the choice. So choice has been strong, but you're seeing weaker select prices. You know, I think some of that has to do with, as you look at cattle weights, higher cost of gain, maybe those cattle weights have come down a little bit. And so you have a little bit more of the product grading select, so that's pressured the select cutout prices, and you're seeing a little bit wider choice select spread there. That's going to incentivize, I think, to feed cattle to a bit heavier weights to get to those choice premiums or negate those select discounts.
So is the ebb and flow of the cattle market kind of normal for what it is for most past years as of right now?
Yeah, I think one way to look at that is slaughter levels are down year over year to date. So we're down about 3.5% in slaughter. But, as you look at our slaughter levels this last week, we're pretty close to the previous week. And so, I think we're entering, a period here where, we'll start to see a little bit larger supplies, but the prevailing fundamentals are overall tighter supplies compared to the last several years, and relatively strong demand is helping hold these prices where they're at.
And Lee, something a little from the cattle markets is USDA and the National Agricultural Statistics Services recently put out a few reports that you wanted to talk about today. And one of those is the Cattle on Feed report.
So our Cattle on Feed updated us for on-feed numbers as of June 1. They're not too much of a surprise as it came in really close to pre-report expectations. We're down 2.9% compared to a year ago levels. The big surprise, I think, in the report was placements. So placements were up 4.6% compared to a year ago. That was almost 3 percentage points larger than what the trade had expected that to be. I think you have to look at a lot of strength in auction data over the last month. You're seeing larger imports of feeder cattle. And I think really that showed out when you looked at those placement numbers. I'll remind folks, so you can only place them once, right? So we're seeing larger placement numbers, but there's fundamentals say we're having tighter supply. So I wouldn't consider this a real bearish report when you look at that. Marketings were much larger too. They were up 1.7% compared to a year ago. That was actually pretty close to pre-report expectations. So I think it is just replacing some of those cattle that we marketed this last month.
And Lee, then another report you touched on last time you also talked with us was the cold storage report. And while that covers a bunch of different avenues, just focusing really on the beef numbers, what are we seeing there?
So overall, we've seen cold storage stocks for beef down about 19.5%, about down 20% for boneless product, down about 16% for cuts. I think this matches what we're seeing as far as production numbers. Production has been down, so we're seeing less show up in cold storage compared to a year ago levels. We are seeing exports down notably, and I know some of the product gets staged for export, but I would really point to these cold storage numbers as showing that we continue to see really strong demand, so products not showing up in cold storage, which is a good signal for the market.
Some good news for producers right now?
Yeah, I think it's, from a demand standpoint, continues to remain a good sentiment going forward. It's one piece of data that we can really point to that we're not seeing those stocks build up. And so, important to know that, we continue to see that product flow in the pipeline, both exports, but also importantly, domestically.
And one more thing for us to talk about today, you wrote an article called Watching Smart Money Commodity Training Could Pay. And so what is smart money?
Yeah, so this is a little bit of a play on words and looking at, we talk about smart money in sports betting. The smart money there is professional bettors, right? So they're the ones that are reviewing a lot of data, statistics, reports to give them an edge for their trade, right? And so, when you think about traders in the futures market, they're categorized in the Commitment of Traders report into relatively 4 broad categories. And what we can think about the smart money is those are the producers or the users of the products or the commodities, right? So for the live cattle complex, think about these as the producers that are hedging against prices going lower, and users, beef packers in particular, that are hedging against prices going higher, right? And so when we look at that, those players are in the market a lot. And some people call those the smart money. Now, I'll also remind you that there's other players in this market, right? So there is money managers, or some people call it the money in the market. You have the swap dealers, and then you have the other reportables as categorized by the Commitment of Traders report. Now, they're also putting their money at stake, betting on which way the market's going to go. And really, the latest Commitment of Traders showed that, we actually have more open interest than we've had, and cattle on feed numbers are lower. So, I think that's maybe one indication that producers may be hedging more cattle compared to 2022. Certainly prudent, as we're seeing a lot higher values, right? And so more money at stake. But when you're looking at the positions of those traders in particular, you're seeing the smart money, or the producers and users, are maybe more short, right? So they're more protected on the downside, whereas the speculative money or the money managers are more long, right? And so they're speculative, very bullish in the market. Now, the concern when you're looking at the flow of this money is at some point, those speculators may offset those positions, and that would soften the market. So, I think this is a really good time as we're looking at these relatively strong prices for producers. Maybe we've come off the top. So again, it's a time to review your risk management and really identify some opportunities to hedge, buy some put options, or look at some of the price insurance available to producers when we're looking at, again, a lot of dollars at stake. We're coming off some of the record highs that we've had. And again, maybe review your risk management strategy.
So really hoping for producers to use options they have available to them to be successful, hopefully, in the market.
Yeah, I think, what one tool in your toolbox when you're reviewing the markets, we talk a lot about fundamentals, right? And that's the fun stuff to talk about. But the flow of money is also very important here. And that's why I wrote this article about the Commitment of Traders report, and understanding that a little bit can give us some signals in the marketplace. I'll highlight that the CME Group has a tool on their website about the commitment of traders. It allows you to slice and dice the data and look at the data a lot quicker than downloading it yourself in a spreadsheet or something like that from the TFTC. So I'd encourage listeners to go check that out. It may give you some opportunity to look at some data that you haven't recently or haven't looked at before, that give you a little bit of signals in the marketplace.
Lee, I appreciate you taking the time out of your day to come on and give us a cattle market update. Thank you.
All right. Thanks for having me, and we'll talk to you again soon.
Absolutely. That was Iowa State University Extension livestock economist Lee Schulz. The resources that he mentioned in today's show will be found in today's show notes, which you can find on agtoday.net. We're cutting to a short break now, but we'll be back with more ahead on Agriculture Today. You're tuned in to Agriculture Today, and at the beginning of June, the global collaboration of Sorghum and Millet was introduced. And so in to talk about what is this global collaboration, we have Nat Bascom, currently the Assistant Director of the Sorghum and Millet Lab. However, will soon be transitioning into being the Director of Engagement and Leadership for the global collaboration of Sorghum and Millet. Nat, thanks for joining us today.
Good to be here, Shelby. Appreciate the invite.
The global collaboration of Sorghum and Millet. What is it?
We've been managing here at Kansas State University the last 10 years a research for development grant that is funded by the United States Agency for International Development. So over the last 10 years, we've been working in West Africa, in Ethiopia, Haiti, Madagascar. And so we've built up, I think, this really incredible network of expertise for the continent of Africa, but also globally, as it has spillback benefits to the U.S. as it relates to sorghum production, as well as pearl millet. And so in July, we will be finishing that 10-year program. We acted as the management entity for that. And so at K-State, together with the dean, we felt like it was time to sort of move into the future and institutionalize this work that was funded by USAID, to take it forward at Kansas State and to kind of propel us into the future, doing similar work but expanding in terms of the types of partners and in resources that we can kind of organize to continue to really tackle food security in Africa based on these crops, but also with benefits back to the U.S. Producers as well.
And so something that the global collaboration is working on is resiliency and sustainability for the two crops. And so what are some things within those words that you want to work on?
So we really believe in working across the entire value chain, meaning that we want to look at that harnessing of the incredible genetic resources of these two crops, which originate in Africa. We also want to look at really unique and appropriate technologies for production environments, both the smallholder as well as large mechanized operations, and then really moving even into what we would call the value addition, the market pull. So you're looking at unique food products, which in the U.S., I think about maybe 6% of the sorghum crop is utilized for actual food products. But in Africa, it would be the reverse. It would be almost 90%, because those societies across the Sahel and in Ethiopia and increasingly in Madagascar, they really are depending on these climate-resilient cereal crops for their day-to-day food basket at the home level. And then also as people migrate to cities and you have urbanization, people are looking for really modern food products that are based on these ancient grains that they're very used to, which are sorghum and millet. So we work across that entire aspect of the value chain. And so if you think about sorghum and pearl millet, they are basically de facto grown in usually very hot and dry, extreme weather conditions throughout particularly the Sahelian zone. If you go from Senegal and you move across Niger, Mali, Burkina Faso, over to Chad, even into northern Sudan, and of course into Ethiopia, that whole band across that has societies that is the only cereal crop they could grow. And so these crops have adapted to those really extreme conditions, and so they are resilient, but we're trying to even build further on that resilience.
And so this is a global collaboration, and as you've mentioned, a bunch of different places now, and so a lot of climate differences and when you travel across the world. And so how are you hoping to help these crops adapt to these different environments?
We just got back from a global sorghum conference, which this year was in Montpellier in France. We had about 450 people from the globe there, from parts of Latin America, Africa, United States, Europe, Australia, China. And so all those growing environments are unique, but I think in terms of the crop is very adaptable, and the genetics are, I think, there's great potential in the genetics to do much more in terms of finding unique traits that drive resilience, not only to heat and drought, but I'll give you an example. In Ethiopia, we have been working in Ethiopia in a higher rainfall area. So the limiting factor in that area is not so much heat and drought as it is disease pressure, because you have higher rainfall. And so we were able to find the genes that give resistance to a mold called anthracnose, and finding that and then being able to bring that through a traditional breeding program and ingress those genes into what farmers already grow in that area led to a release of a open pollinated variety in Ethiopia called Merera. And in that Bako area, that gives probably a 30% yield gain. But part of that is because over time, a lot of these national breeding programs have focused on heat and drought. Nobody had really tackled some of the higher moisture disease-related issues. So that's just an example of other growing environments, say in Latin America, where that's the case. Again, the crop has a real, I think, future to be produced in a lot of different environments, not only in what we typically think of in, say, western Kansas or other parts where heat and moisture are a big issue, but even in higher rainfall areas as well.
And so another kind of different region that you've worked with or are going to be partnering with in this global collaboration is Africa. And you mentioned a bit before it, and it's kind of an interesting story.
Yeah, so we have over the years built up what we would call a Pan-Africa network of expertise, knowledge, technologies. So over the course of our work, again, I'll give you an example. We were in Niamey, Niger, which is the capital of Niger, in February, and we were there for our annual review meeting. So we had about 120 people from West Africa. We also had about 5 or 6 from the Madagascar team and about 20 from Ethiopia and a few from Haiti. But in that room, we had some of the top genomists in the world who are at the cutting edge of trying to locate and really dig in on gene discovery and then what those genes can mean over time into an improved seed and essentially increased production and unique traits. So you've got that. At the other side of the room, we had women entrepreneurs who were from rural Niger who had been trained on different sorghum and pearl millet-based food products that they could produce and package, label, and sell in their own village. And so these women don't speak English, don't speak French. They just speak their local dialect, in that case, which would be Hausa. But to me, it was just a picture of this breadth. And those women are the very women that we would probably have exchanged for some of our women in Madagascar who at a home level want to use sorghum, but they're not used to it. They don't know how some of the functionality and what kind of food products you can make out of sorghum. Those very women in Niger will be somewhat the exchange team with some of the women in Madagascar. And then you can move all across that spectrum: seed companies, breeders, economists, plant scientists, pathologists, anywhere along that to kind of get a Pan-Africa exchange. And that's what we're trying to do. We're trying to share all the technologies and expertise that have come out of the last 10-year program to really share that far and wide in the continent and also into other what I would call spillback benefits into the U.S. system.
And now on the United States, Kansas is the number one producer of sorghum. And
proud of it.
What does this collaboration mean for producers in the U.S.?
In the past, and this is what we want to continue to leverage, one example of that is that some years ago, we faced sugarcane aphid pressure here in the United States, and some of the material in southern Africa, in Zimbabwe, had been under that kind of pressure before. So from the Africa colleagues, we had a little bit of a jump start on what types of materials that they had already been utilizing in their breeding program vis-a-vis sugarcane aphid resistance. Number two, we had programs in Haiti, and Haiti has intense sugarcane aphid pressure. So if you want to test something, go to Haiti, where we had programs already aligned and working on this. And so we were able to do a much quicker throughput of what you would call a breeding pipeline to find quickly what were the genes that would allow and provide better resistance to sugarcane aphid. And that all was public access. So that information then flowed quickly to the actual seed companies here in the U.S. And that is by and large what they've used to then speed up their hybrid breeding program here in the U.S. to address that sugarcane aphid resistance. And so that sort of peaked, and we're in a better situation now. But I think there was something like a $200 to $300 million savings for the U.S. production industry based on that ability for us to leverage in this science that was already there through our Africa and Haiti colleagues who were already facing sugarcane aphid pressure, and be able to pass that information, the actual mapping and genomic information, to the companies here in the U.S. to basically speed up the process to get an improved hybrid here for the U.S. producer.
That was Nat Bascom, who will be the Director of Engagement and Leadership for the global collaboration of Sorghum and Millet. We'll have links if you'd like to learn more about this program in our show notes, which you can find on agtoday.net. We're cutting to a short break now, but we'll be back with more ahead on Agriculture Today. You're tuned in to Agriculture Today, and for our last segment on Monday, we have some wildlife information. And then to talk about feral hogs today, we have K-State wildlife specialist Drew Ricketts. Drew, thanks for joining us today.
Yeah, thanks for having me, Shelby.
Feral hogs, wild pigs, whatever terminology you'd like to use, why are we talking about them today?
Well, feral swine are present in Kansas. We've had them here since about the early 1990s, and they are an important introduced species that causes a lot of problems in a lot of different parts of the U.S. So to think about how bad or how big of a problem they are, the economic burden of feral swine damage and their control in the U.S. amounts to about $1.5 billion annually. So it's not a trivial amount of damage.
And there's a lot of that damage to agricultural interest.
It is, yeah. So lots of crop damage. There's also livestock losses. And then competition with and predation on native species of wildlife is also a concern.
So in a recent study, they compared what different state regulations were and maybe how strict things were and maybe how that translated to how many issues they were having with feral hogs.
That's correct. So this study's out of Mississippi State University, and it looked at about 10 years of data from basically all the states in the U.S. that have feral swine problems. And what they found is that the more restrictive a state is on allowance of hunting or allowance of landowners to charge fees for hunting and the allowance of transport of feral hogs, the less likely feral hogs are to be a problem in the state, and the fewer counties are likely to be occupied by feral swine in that state.
So how does Kansas look like in terms of this stuff?
So in Kansas, we have never allowed feral swine to be hunted or transported within the state. And that is something that is pretty counterintuitive when we think about the management of most wildlife. But the reality is that feral swine are an introduced species. So feral swine are a hybrid of the European wild boar and different breeds of swine that we produce for agriculture. And we have selected those agriculturally produced swine to produce more litters, more piglets in a litter, and that sort of thing. And so we see this sort of hybrid vigor where we have these wild pigs that are very, very prolific and able to reproduce quickly. And the reality is that recreational hunting can't really keep up with the control of this species. The other thing that goes on is when we allow people to hunt feral swine, they typically enjoy it. It's fun. And there gets to be businesses built up around this. And when that happens, then people want to move swine around. So in Kansas, we have one population of feral swine that still exists, and it's down around Uniontown. And in that area, there is very little cooperation from some of the community with the USDA to be able to control swine on that land. And so basically what USDA is doing is eliminating the feral swine that come off of that property and then keeping them contained back to that land once a year or so. But it's a year-long process with trapping and that sort of thing. When I say once a year, that refers to the helicopter time that the USDA gets in our state. So they spend most of the year using night hunting equipment and traps to remove as many of those feral swine as they can. But then in January or February every year, we get some helicopter time when they come in and they get a whole lot of work done. But all of that year-long work allows them to do surveillance and figure out where the pigs are going to be when they get that helicopter time.
And so is Kansas almost a model for a lot of different states as our populations have decreased?
Kansas is one of the very few states that has never allowed recreational hunting, and that's very true. We are a model system for how to do feral hog control right, and a good example or good evidence for the fact that we are doing it right is that we are one of the only states from Kansas south that has fewer counties occupied by hogs now than we did in the year 2000.
Drew, a lot of information about wild hogs. Thank you for coming in and sharing it with us today.
Yeah, thanks for having me, Shelby.
That was Kansas State University wildlife specialist Drew Ricketts discussing feral hogs and the financial damages they can cause and how Kansas is a model state for this species. That's all we have for you today on Agriculture Today, but we'll be back with more for you tomorrow.